How's it going, everyone? Today we're going to be looking at Opendoor Technologies stock. The stock is up 42% over the past day. And we're going to take a look at the financial of this company as well as the guidance to understand, is this company a buy or is this just another meme stock that's getting all this hype and attention undeservingly? But if we look at the financials of the company, we're comparing Q1 of 2025 to Q1 of 2024. Revenue actually declined year over year. You had $1.15 billion in revenue for Q1, and compare that to 2024, which was $1.18 billion of revenue. That was a slight decline in revenue. Overall earnings per share, you had a 12 cents earnings per share loss Q1 2025 compared to a 16 cents earnings per share loss in 2024. So you did see an overall improvement in profitability. If we take a look at the balance sheet real quick, you did actually have a decrease in cash and cash equivalents of $100 million. So the balance sheet is looking like it's actually regressing, and you're not seeing overall improvement here. So that is one reason for concern as well. But the guidance that this company gave for Q2 of 2025, which was actually a little bit of a step in the right direction, Q2 revenue guidance was 1.45 billion to 1.52 billion, which would be a pretty nice improvement from the previous quarter, which was $1.15 billion of revenue. So maybe that justifies the fundamentals just slightly, but we'll take a look into that a little bit more here in a second. 9 analyst ratings, 11% buy, 67% hold, and 22% sell. The median price forecast is around 90 cents per share, which is 72% downside from where the stock is currently at. And now, one thing we really need to keep in mind is that this company is in the housing industry, and the housing industry is having a very poor time right now. United States existing home sales are the lowest they've been in recent history, remaining around 4,000 per month, which is a very strong decline from where they were about 5,000 back in 2017 to 2018. So that's a very difficult time for the housing industry. But also, what's leading that reduction in overall home sales is affordability is at an all-time low. We're looking at the Federal Reserve Bank of Atlanta Home Ownership Affordability Monitor. If we can look at these numbers here, April 2025, the share of median income was 46%. So if you had a median household income of 79,409, with the average median household price or home price, of 392,500 around the nation. This is the total statistics for the United States at 6.7% interest rates. You're looking at median monthly total payment of around $3,069. So for the most part, housing is currently unaffordable for the average person. And if you look at this chart here, the last time affordability was this bad was about 2006. And we all know how that went down. You had a massive financial crisis that occurred in '08, and in large part caused by the subprime mortgages and in those housing bundles, which Wall Street figured out very quickly were worth absolutely nothing. So that is a very concerning and alarming comparison to make here of the condition of the housing market. So combine a severe affordability crisis with, as you can see, existing home sales declining sharply the past couple of years. This has really been ever since like 2023. And you could see pretty much a relationship between this and inflation that occurred in 2022. You're looking at a serious problem. So is it a good time to buy Opendoor stock? No, absolutely not. It's not a good time to buy Opendoor stock unless you want to trade it. You can trade Opendoor stock, but I am presenting you the information that you need to see from an investment standpoint. This company has a lot to be desired. There is no profitability, and you do see an actual regression here in the overall health of the balance sheet. Cash and cash equivalents going down pretty steadily. This company has a lot of risk involved here. I would be very concerned about purchasing this stock right now, especially with the shape that the housing industry is in. I would be very concerned, and I would proceed with a lot of caution with investing in this company. But if you want to trade the stock, by all means, go for it, because this thing seems like it's the next GameStop. That's what they want you to think. But be very careful. This thing could probably collapse anytime because there are not solid fundamentals leading the stock higher. So if this gave you information that may help you with an investment decision, I hope it did help. But if you disagree with me, let me know in the comments, and I'll see you on the next one.